Welcome to the Supranationals and Agencies panel discussion. I'm joined by 6 distinguished guests. My name's Ralph Sinclair. I'm the editor of GlobalCapital. I'd like to start by asking each of our panelists to introduce themselves. Daniel, could we start with you, Pat?
Sure. My name is Daniel Zelikow. I work at JP Morgan. I'm vice chair of our public sector client business and also head up our global infrastructure finance and advisory business.
My name is Petra Wehlert and I'm heading the capital market business at KfW.
I am Hugo Sarmiento. I am the Chief Financial Officer for CAF, the Development Bank of Latin America.
Good morning, Jingdong, Treasurer of ISC.
My name is Laura Fan, and I'm the head of funding at the Inter-American Development Bank.
Good morning. My name is Søren Elbech. I'm the Treasurer of the Asian Infrastructure Investment Bank in Beijing.
Right, so interesting times of late in capital markets. An era of sort of where QE's muted kind of everything with a lot of cheap money, but recently we saw a sort of a bout of volatility, especially in Europe. And I'd like to start by asking our panelists how they're sort of preparing their issuance programs for the rest of Fed hiking cycle and the end of QE in Europe. I think probably Petra, you issue the most, so you should probably start off.
Yeah, I mean, we have a 70 to 75 billion program, and so we have to balance that over the year anyways and to cope with the market conditions. So we started early this year. So in January, I think conditions have been quite good, especially on the dollar side. We could issue long-end bonds in the 10-year segment and also in the 5-year. And so January was a quite efficient month also because other levels, non-euro levels, have been competitive versus the euro market, whereas that changed in the course of the year. And so it's very much euro-related, our program this year. We have more than 50% euros. We did now 45 billion overall. Yeah, and on dollars, curves are very flat, so we are more on the shorter end. Well, very much I think the market is dominated on the euro side by the redemptions of the APP or the PSPP program from the euro system. So we have seen that redemption have been weak in January, so we had more volatility. They have been strong in April, so there has been a very strong market. And the volatility in Italy, at the end of the day, you know, we benefit from our direct guarantee from Germany, so that because of the safe haven flows, we even can outperform in those times. And overall, I perceive that there has been a normalization in spreads in the peer segment meanwhile, so getting prepared to normality. So it's not so much different than before. So we haven't done a lot of pre-funding, but however, we try to find windows, and all the bonds we have done are more on the larger side, so more between 4 and 5 billion euros, and same on the dollar side.
Laura, perhaps you could go next.
Okay. For ourselves, we haven't done anything that's extraordinary or out of our typical issuing patterns. So as of today, we've borrowed 65% of our annual funding program, which is $19.5 billion. Similar to what Petra said, we have seen larger issue sizes based on the demand from investors. So for example, we issued our largest primary deal ever. It was a $4 billion 3-year transaction. It was basically 7.35 billion demand, and we had a record number of investors in that particular transaction. Now, going forward, what we would anticipate, especially what we have seen sort of in the second quarter, is that with the PSPP purchases declining, then to some extent, I think that you'll see a gradual increase in terms of credit spreads, especially in the euro market, because there's been a lot of euro issuance. If you take a look, for example, in the month of May, typically there's a lot of dollar issuance, and what we have seen is about $3 billion of SSA issuance, which is not a lot. A lot of that has gone to the euro market, and with the PSPP purchases potentially declining and stopping altogether, the rise in spreads there could have European issuers look more at the US dollar market, especially going forward. And so we envision that there probably will be more competition going forward as opposed to right now. And also to some extent in terms of the Fed rate hikes, we are less affected by the Fed rate hikes because we're not fixed rate borrowers. We swap everything into floating rate US dollars, and so to that extent, we're more concerned about how the impact of swap spreads are as opposed to the absolute level of interest rates.
Well, two things from our side. Our funding program is smaller than KfW and IADB, and we really wanted to achieve as much of a sub-LIBOR level as we can. So last year, which ends actually in a couple of days, June 30th, we've done about over 360 issuances from global benchmark to very small retail bonds, just to make sure that we diversify as much as possible our investor base. So we tried to term out our funding program. I think a couple of things. We are very fortunate to tap into the callable couple billions, and now that has extended our duration quite considerably. The other is that we have issued a fair number of about 1.85 billion floating rate notes to satisfy investor demand. And we tapped the first social bond in Aussie dollars and the first green bond in New Zealand. So we try to diversify as much as possible. But there is a second element. I think this is more a broader IC concern, is that with the Fed rate hike and eventual termination of the European QE, is that the interest of institutional investors going into emerging market will diminish. So we as an institution are expected to step up, to increase our lending to our developing country private sector clients. And this is where we have a very good piece of good news, that it's the World Bank Group. I think at the spring meeting received endorsement from on board for a general capital increase. In that, I think IC received 5.5 billion. If rectified by our shareholders, we plan to use that capital to ramp up our annual lending program from about 12 billion to 25 billion in the next decade. That certainly means we're going to ramp up our funding program also.
Do you think that will lead to having to, I guess, pay more premium, or do you think like there's plenty of capacity in the market for people to absorb more IFC supply?
Well, I think to be honest, there aren't a lot of AAAs left, but we're happy to welcome AIB into that club, and IDA for that matter. So I think as international AAA issuers, we should have no problem in terms of access to funds. And we as a community have demonstrated through the global financial crisis, through the European crisis, through recent volatility, I think we have never had any problem accessing. As Laura said, it's really the volatility of the swap curve, right? How can we swap back into a LIBOR that it reflects our AAA rating? From time to time when volatility is high, you have a spike. But I think over history, we have seen our community as typically a sub-LIBOR issuer. I don't see that going away. Mm-hmm. But of course, the issue of LIBOR itself, it's
and the whole other panel discussion, I think, probably. And Hugo, what about your recent experiences and how you're preparing to issue?
Well, we're really the only AA issuer in this panel, so we have to be very cautious about our funding costs and be very careful about being opportunistic in terms of sourcing our funding. So throughout the year, what we've been doing is focusing a bit more on the euro side, the euro markets, and we've been very successful at that. We've done already 2 benchmark issues in the euro markets. We've done most of our funding for this year also, up to this date. And in order to optimize the cost of funding for us, we have combined a mix of benchmark issues with private placements. And this has worked very well, particularly in terms of tapping other currencies that afford us a good overall cost after swapping back into US dollar floating. Just like the IDB, or we would swap back to floating as well. So this is the thrust of the strategy so far. It's worked very well. Our funding costs have been dropping rather significantly. And as I said, that's rather key for the AA issuer compared to our AAA peers, because of our higher funding costs, our lending rates have to be higher also. So it's an area that causes a great deal of concern. Looking at the potential impact of the Fed rate hikes, the diminishing flows of capital to emerging markets in America and Latin America in particular, it's an area of concern. So we're looking at that with great care, whether it's going to affect demand in some way as other sources of funding diminish. There could be increasing demand for our resources. So all of these aspects are being taken into account as we execute the funding program this year.
Okay. And Søren, you haven't issued yet, but has our progress around the Fed funding hiking cycle affected how you're approaching how you may or may not issue a dollar bond in the near or medium term?
Thank you, and thank you, Jingdong, for inviting us into the AAA round. Indeed, we are in this incredibly exciting and unique situation of becoming a first-time borrower. So we have spent a lot of time in the last year to prepare that, both in putting together our documentation platform, our swap platform, and then a very rigorous and very active investor marketing program. So we have, together with bankers, mapped the investor base that we need to have, get approved lines from and get a good conversation with, so that we can understand how to best place AIB. Of course, the various changes to markets, both in terms of rate hikes and so on, they all affect the demand on various parts of the curve, right? We are seeing, for instance, an inversion of the longer end of the dollar curve, which means that there's now a very big interest in getting into the short end of the curve. These things, of course, affect the ability for the market to be effective if and when we get ready to come to the market. The absolute rate level is not so important, as already mentioned by Laura and Jingdong. It is because we will be swapping a fixed rate bond issue to a floating rate index like LIBOR. So therefore, the level itself is not so important. The swap spread and the volatility in the swap spread is absolutely critical for when we come to market. There's so many things that have to come together for us, as I said, documentation platform and investor approvals before we get there. But hopefully, before the end of the year, we can all celebrate a successful inaugural bond issue by AIB. And I should, of course, take this opportunity to say that we fully understand that we stand on the shoulders of all this work that all these AAAs have done before us. So, of course, we are benefiting from that when we come and meet other investors, because when we present AIB as a supranational, there's a lot of head nodding going on as to what does it actually mean. So I think that should pave the way for a successful entry before the end of the year.
I just want to skip ahead to our third question, and we'll come back to the second, but just I want to bring Daniel in particularly. I wanted to start talking about what new markets supranationals might be considering entering this year. And we were talking in the pre-panel meeting about local currency markets. So Daniel, could you give us sort of an overview of where you see sort of the role of supranationals in local markets? Because it is an important part of their work, isn't it?
Well, I think one of the important things that the multilaterals have done over the years is that they've seen themselves as not just funding their balance sheets, but also the power of having a AAA or a AA in creating new markets, so that they've in effect been an agent of development in addition to funding themselves. For example, many years ago we worked with the IFC in opening up the Peruvian market. So since then, many of the multilaterals have done local currency, foreign law deals, but they've also done local currency, local law deals. And so in the process, they've helped raise regulatory standards in local markets that had not yet been used to having a foreign issuer enter their market. They have improved disclosure standards. They've helped develop a local investor base. to the point that they've also, in some cases, even created local treasuries. They've used the proceeds. It used to be the case that they would take the proceeds, swap it back to dollar LIBOR, but there have been some instances where there's a steady flow of investment projects in a particular country where they found it convenient and also constructive to take the proceeds and invest in local government bond markets, thereby deepening those bond markets themselves. So I think that kind of having a development agenda as a treasury has been a really important expansion of the role of multilateral development bank institutions over time. And I expect that they're going to be continuing looking for creative ways to do just that.
Jingdong, LIC's done plenty of sort of firsts in local currencies. Are there markets you sort of anticipate going into over the next year or so that we haven't already? Or?
Yeah, if I can just follow what Dan said, one market that we really was very fortunate to work together to build is the Masala market for India. IC has issued about $3 billion worth of Masala bonds. These are offshore Indian rupee linked bonds that we issue out of London and Singapore. And we essentially built a AAA curve for the currency. So we issued from 3, 4, 5, 7, 10, 15 year. And because of that success, Indian government then permitted corporate India to start to tap into the Masala bond market. I think the total market is now about 10 billion and growing. So creating a new asset class for the world. Tomorrow, we are very fortunate to work with our clients from Uzbekistan, as IC has just issued the world's first Uzbekistan Som bond. As Dan said, in addition to dollar financing, which as a AAA, very attractive to our clients, more and more of our clients demand local currency, especially following the global commodity super cycle ending. Many emerging market currencies dropped substantively. Therefore, those who borrow dollar from us, where they generate local currency revenue, all of a sudden found, well, it's actually quite expensive in borrowing dollar. So to the extent that I, as a treasurer, could raise local currency financing so that our clients will just need to focus on growing business instead of worrying about foreign exchange volatility, that has developmental benefit. So, and I think our community, because IC is focused on private sector, we are sort of the leading indicator. So I just want to share that this year, which is from July 1st, 2017 to June 30th, ISC's long-term debt financing of about 11 billion, 10 to 11 billion, over a third is in local currency. So it's a strong trend. I would not be surprised in 5 years, it probably will be half. So establishing local currency treasury is actually a very good indication. The depth, the regulatory environment is sufficient enough for AAA to treat that currency's capital market as liquid or as vibrant as dollar market, right? I think, Laura, you guys in Brazilian real, we in Chinese yuan, Indian rupee, Mexican peso, and we're going to Colombia. I think these are building blocks of stimulating local capital market development, that eventually that we can recycle local savings, but also, if I may just add, that provide international institution investors additional exposure and a bond offering. So very exciting.
Yeah, and is that something you see the IDB doing a bit more of? Or?
Yes. So we have established local currency treasuries in Brazil, Mexico, and Colombia. And so currently we are funding those treasuries via the derivatives markets. And the derivatives markets clearly have some benefits because typically the IADB's loans to our borrowers are very long dated and they are on an amortizing basis. So therefore the swap market has the opportunity to customize the cash flows and it's very easy to execute and it can be executed quickly. So for example, just recently we had executed our first ever CDI into IPCA. IPCA is an inflation in Brazil, which was therefore then on lent to a borrower in Brazil. Now, we are also hoping that in addition to utilizing the derivatives market, we can also issue locally as well. And so those are opportunities that we are exploring in terms of local currency issuance in these three currencies. We've already done so in Mexico, but it was not to fund the Treasury. It was done on a global basis, targeting both Mexican domestic investors as well as international investors. And for Brazil and for Colombia, perhaps there could be an opportunity, subject to market conditions, the regulatory environment, for us to issue locally, and we would therefore like to target the domestic investors, which for us would be a new investor base. Now in Brazil, we've been active issuing offshore, and that has been targeted to both international institutional investors as well as the retail investor base, specifically in Japan. But that is those are markets that we potentially could target for the upcoming years.
Yeah, and for AIIB, this is also a very important part as we are setting out our funding program over the coming years. Obviously, we are both lending to public and private sector. So for the private sector component of our operations, local currency will become a critical point in developing the financing. So again, as I said, we have IFC blazing a trail in the Indian rupee market, which allows us over time to, of course, develop financing solutions for our clients in that currency because there has already been established markets there. We have clients across the region, so we will look at other markets as well, and we'll develop a pilot program, and we'll then gradually also look at local currency markets. Of course, the fact being AAA should not be forgotten because it actually allows not only for of course, a pricing opportunity or pricing advantage in the offshore markets that can be carried on to our clients, but for the local markets, it's important because it creates an asset class that allows investors to invest into and therefore gradually extend the yield curve, which goes back to what Dan said about have a development objective also combined to local markets. So I think it's very important that we also embrace that in the development of AIIB's treasury function, to not just have a dollar focus, but of course also have a local focus, not the least for our non-sovereign clients.
I could just add one thing to what Søren said, is that these institutions, the multilateral institutions, because in many cases they're treated like a local issuer, because they're owned in part by the country in which they're issuing, they're able to do a lot of the upfront work that other issuers also probably wouldn't have taken on their own. So in effect, because sometimes it takes a lot of effort to just kind of get the regulatory authorities comfortable with what could be seen as a foreign issuer or a non-government issuer in any case. But because they're considered local, they're almost in a unique position to open the market for other foreign issuers as well. Sorry, Petra.
Yeah, I mean, perhaps also a little bit a capture market view here. I mean, we used to do more in local markets actually than we do these days, just because it's interesting and that's true, but it's also pretty complicated from a legal and regulatory point of view. And in ideal markets, from capital market side, we would like to have domestic investors and international investors, because that delivers the deepest market. However, I mean, getting the domestic investors is sometimes challenging just because our bonds are pretty expensive for them. So usually we price on a government plus, we price local governments plus, and that might be one point. We are AAA government guaranteed in Germany, and the other thing is, all in all, it's for us then too expensive. So we have to see how we get the best execution, and sometimes international investors do somehow are somehow more dominant than the local investors. Looking at the markets where we are active now, for example, in the Australian dollar market, we really see a very big demand from international investors, and domestic investors at the moment just complaining that they consider the bonds to be pretty expensive. So we have seen that in the Canadian market, where we used to issue actually, that the domestic investors are really hard to get. And so being it because our bonds are pretty expensive, so we are good credit quality, or being it because there's just a big variety of other bonds. However, I mean, from an overall perspective, being it from capital markets or from a development perspective, that's obviously something which is a good thing, but it's not that easy, that's my experience, to achieve this goal.
So a couple points just to add on to that. With KfW, we have a fund that is targeted to support corporate bond issuance in sub-Saharan Africa. Because you don't just address the supply side, you also have to address the demand side. Yeah? So the developmental role that we play in terms of hand-holding corporates to give them capacity, to encourage them to diversify their funding source. So instead of yet borrowing another loan from a local bank, can we encourage you to issue a bond format? And over time, that could stimulate local currency development. In frontier market, it is true that there is no market per se, but there I think we also have players like TCX working with us in providing synthetic local currency solution as a first step. And then, when the governments are interested, we help with the government with regulatory reform. So recently, just to mention that we plan to issue in Bangladeshi Taka, Sri Lanka Rupee. We just issued Botswana Pula, that's a global first. We actually also issued in Rwandan franc. It took us some time in terms of supporting the governments to get the regulatory framework in place. But I think never underestimate the fact that when a AAA issues in a sub-Saharan Africa currency, that sends a very strong signal that that country is ready to welcome international investors and bond issuers.
Is that something that's open to you guys? I know you're not AAA, so do you have the same sort of access or demand for local currency bonds?
Yes, we do, and our experience is similar to the AAA issuers in this particular aspect, mainly because as an issuer in a local market, our ratings internationally will be much higher than the local government's rating. So the experience is similar in terms of the impact you can have regarding diversifying investment options for institutional investors in those countries. Many of our countries have a great deal of concentration in investment in government paper. So institutional investors that are developing the local markets need to diversify. And this is where the issues of other supranationals and CAF itself add a great deal to the local market. So we have a similar experience. We've issued so far in about 19 different currencies, and many of those in Latin America. Very significantly, we did our first green bond this year, and it was in Colombian pesos. So that gives you an idea that local markets are evolving and that they offer interesting opportunities. We, of course, have to go one step further and focus very much on the opportunistic aspect also in order to maximize the benefits that we can get from swapping back to US dollar and funding our overall operations with these currencies. That may limit sometimes the amount of issues we may do, but it helps us keep a close eye on our cost of funds.
Okay. Now, so speaking of green bonds, I mean, is this something that's obviously a market that's ballooned out of nowhere over the last few years. Is that sort of scrutiny on what supers and agencies do much more of a focus from investors? Now, do you find yourselves doing much more investor work talking about that side rather than just pricing away your own funding program and that kind of thing? Petra?
Yeah, it's interesting. Well, KfW is probably very well known globally. So our investor community, as the central banks who really are our most important investor base, they all know us. So we go there and update them. And if you are far away from Europe, you get the questions regarding Germany, regarding Europe, and more than probably what's going on at KfW. So it's the full scope. We deliver for the investors who know our name and they expect it from us. So this is something which we have intensified. And discovering new investors is something which we which we still do in the US, for example, especially. So the positive aspects from regulation are that our bonds are considered as level 1 assets in the US, and also this has also been just confirmed by Bloomberg, so we can travel around a bit and show it to smaller bank treasuries, and so we get new investors there. And otherwise we go to conferences, and so has that really much increased? Not necessarily. It's anyway on a high level, and it's an ongoing work also to educate new people in this business. No? It's not only that an institution knows your name, it's that the people who actually come new into this business, they are familiar with that, and the questions we get are both. So also, I mean, I still see that many of the portfolio managers, they are interested really much in the details about pricing and new issue premium, and everybody in capital markets knows every bond. So this is everybody remembers which bond, which development. This is quite interesting. That has not changed.
Søren, you've said some quite interesting things recently in a Global Capital Roundtable about certainly the AIIB's how it will end and whether it's into the sustainable framework. I mean, isn't this the point that possibly green bonds should become a sort of redundant product almost for supranationals, because everything they lend to, generally speaking, has a good social outcome, one would like to hope. And is that something, I mean, how is the AIIB setting up for that?
Yeah, thanks for that. And we've had, of course, over many, many years, there's been a tremendous innovation in capital markets, and that will, of course, continue to be the case. For AIIB as a new issuer, we, of course, have the, again, unique opportunity to, with a clean slate, think about how we go about this from the beginning. As every lending project, every investment operation that AIIB does will be subject to an environmental and social governance framework, and we have no legacy assets, we have been able to say that every bond that we will in the future issue will exclusively go to fund projects that qualify under our internal ESG framework. So therefore, we have in our user proceeds language for our bond documentation platforms, we will have language to that effect saying that an investor who buys a bond should expect the revenue of the bond goes to funding projects that are ESG compliant. So that allows us from the get-go to be a sustainable issuer for the bond market and not having to issue any labeled bonds. That allows us to, in essence, access a much wider, a much broader investor base than if we were to go specific for any niche market. Of course, we are looking at the development that happens for the market as much as our peers do. So, of course, we will be watching very carefully as to whether developments into niche markets will continue, or whether there will be a continuous, say, development or innovation. I mean, Hugo's point about doing the first green bond, but in a local currency at the same time, is of course very important to think that investors now also in local currency are becoming more observing as to the sustainability angle of their assets, and of course that is something we will monitor very carefully. I wanted to mention also, I mean, I have this privilege over my time in markets to work for. I mean, this is the fourth public sector issue I'm working for, right? NIB, Export Finance, so Inter-American Development Bank, and now AIB. So I've met many of the same investors over the years in different uniforms, and I must say that the asset class, the supranationals, is an incredibly well understood asset class, and so therefore the pricing is of course super tight. It's the advantage we can give to our clients. The innovation that each of these panels borrowers can bring to market is vast, will continue, and I'm sure green bonds, even if they no longer will be there because it has kind of run its course and the supranationals have worked into that, there will be new innovations, new things that become important for our missions to link our missions to the capital markets. And of course, at the end of the day, what I keep saying, my job is of course to provide the lowest possible cost of financing for our clients, and we will work with not only our peers but also with our investors to ensure that we meet that objective.
Laura, you've issued a couple of sort of SRI bonds. Can you tell us a bit about that experience and how what the extra, I suppose as well, what the extra onerous requirements are on you in doing those bonds, and do you get a pricing benefit from it that offsets that, or is that not the point?
Yeah. In regards to, and I'm going to use the word green bonds, but I'm going to use it green meaning, green, social, as well as sustainable development. So I'm just going to use that as the catchword for all three of those. What's particularly interesting for us is that we see a lot stronger investor interest in regards to the green bond space. So let me just use an example. I was in Asia last May, and typically when I travel to visit investors, I always ask the question, are you interested in ESG investing? So when I had asked the investors, specifically in Japan, in the past, the answer was typically no, not really. However, this time it was interesting because I never even got to ask the question, they asked me the question. And part of that is due to the fact that the GPIF, or the Government Pension Investment Fund in Japan, is looking to allocate money to asset managers, insurance companies, in order to basically have them invest their monies. And so because the GPIF is looking at incorporating ESG criteria into their investment allocations, it has forced the asset managers and the insurance companies looking to invest that money to also now start focusing on ESG criteria. And so to that extent, we've seen the increased interest, and in regards to talking about IADB, you're not just talking about the financials, how we're trading, you're also talking about what we're doing on the lending side, but also what we're doing at home. So more the focus on corporate sustainability. Now, having said that, we also expect that in Europe there will be greater interest and demand as well, above and beyond what we currently see today. The European authorities have commissioned the HLEG, the high-level expert group, to look at how investment managers can incorporate sustainability factors into their investments. And there's basically 4 criteria. And one of the aspects that they're looking at is developing guidelines, ranging from, what is sustainable, including climate change mitigation, to basic infrastructure needs, basic health needs. And so it's a wide spectrum that covers both green, as well as social, as well as sustainability. So if the European fund managers, because of government regulation, is now required to contemplate integrating sustainability factors when making these investments, we expect that the demand for these kind of products will grow. And the growth then could potentially allow us to reduce our costs, because currently when we issue our social bond, which is the I bond program, standing for E for education, Y for youth, and E for employment, we issue those bonds at the same cost that we would issue a US dollar global benchmark. And so in that respect, if there is going to be greater demand, we then would expect that the prices of these bonds potentially, could be lower than our, let's just say, regular benchmark bonds. But of course, having heard what Søren said, to some extent, maybe in the future, they can consider supranationals basically as sustainable development investments, because we map our objectives to the sustainable development goals. We have missions that are improving lives, reducing poverty, promoting social and economic development in a sustainable manner, and therefore we potentially could meet that taxonomy of adhering to those green aspects, and therefore our bonds, not just the green bonds, not just the social bonds, not just our I bonds, could be considered basically in the EU parlance or in terms of principles as basically green?
Well, I have a slightly different take on this. I think on green bond, the green agenda is such an important global priority. Maintaining green bond as an asset class, making sure that all issuers adhere to the highest possible standard, it still has merits, rather than destroy this name and then everything we issue is green. And also the proliferation of other thematic bonds. How do we, as a community, make sure that we don't confuse ourselves and don't confuse the market? I think it's a task we collectively are doing. I think under ICMA, at least on green bond, social bond, sustainability bond, there are definitions, there are global consensus in building. But Laura mentioned GPIF, which is very important, because when an investor with $1.3 trillion says that I'd like to have ESG as a positive factor in making investment decision, because Japan government pension fund by definition is a several hundred year into the future, that kind of horizon. So we are very privileged to have been partners with GPIF. This is GPIF, World Bank, IFC, working together in conducting the first research on what are the ESG factors. It's not an easy thing, right? On environmental, I think there are more work and more evidence, but on governance, on social, it's still work in progress. But I think this is really the right direction. Again, let me also mention on the demand side, because we as issuers, we supply. How do we then make sure the demand side is there? And this is where I think I see very, we are very happy that we work with Amundi to come up with a cornerstone fund where we put together over $1 billion of money raised from private sector investors. And IFC put a first loss into that to encourage the issuance of green bond issued by banks in emerging market. And we will become anchor investor in those bonds so that we could, first of all, make sure the standards are high, but secondly, by anchor investing, we send a message, these are viable asset classes. Last, let me mention that we also have in IFC a new initiative called the Sustainable Banking Network. This is working with Bankers Association or the self-regulatory body of commercial banks in about 3,000 emerging markets, representing about 80% of the total emerging market balance sheet, in subscribing to our Equator Principle, which is essentially the ESG responsibility in every commercial endeavor they would lend. So I'm glad to see the community is really making sure that we move way beyond the rhetorics in terms of putting transactions on the table. If I may just say a last word on your last question, that is, we as a AAA issuer collectively, nobody can be complacent about saying that, okay, our investors know us, therefore, we just put our bond and then it would be bought. Because each of us would have unique stories to tell. For example, how do we work with refugees in Jordan to give them unique digital ID? So that they not only are refugees, they are entrepreneurs in the refugee camps. I think these are very impactful stories. When we share those kind of stories with investor base, they love it. And we also have other investors like central banks say, can you actually print a certificate of your green bond so I can hang up on my wall to really say that, look, we feel good that we have invested in a global initiative.
And I think we've only got a couple of minutes left. So Daniel, to finish, I mean, presumably you're obviously more involved on the sort of other side of the supranational balance sheet, but this kind of exposure of what they do is, and then the SRI market must be a great benefit to supranationals. And
yeah, well, first let me just say that personally I've come kind of full circle on this. When I used to work with Søren and Laura at the IDB about 11 years ago, and we were approached by bankers to do green bond issuances, we actually said no. And the reason we said no is because everything we did was ESG vetted and considered to be kind of compliant with what we then considered to be the highest standards. Most issuers subsequently embarked on doing green bonds and other thematic bonds, in part because it was a way of communicating what they considered to be a very high corporate value. So there was an element of evangelism to it, that other people should become aware of the kinds of standards that were acceptable for the international community. And then I think over time, it was a way of attracting new investors to an existing investor base that was also quite useful. What we now, I think the next frontier is these green bonds or SRI-oriented bonds, theme bonds. Are investors willing to pay up for them? Or maybe to put it the other way, if they're not green, will investors punish issuers of those assets? So will there be price differentiation? And so far we haven't seen a lot of that, but I think that's to come. I really think that's going to happen. Let me just say one final point on this, is that another really important area, and Jingdong alluded to it, is on their asset side. They have strict, and for that matter, most international banks do as well, have strict vetting standards on ESG criteria. Can they create products that investors want to buy? This is not rooted through their balance sheet, but actually on a standalone basis. Can they use the fact that they've got these high standards, that they're a trusted name, to create products that the investor community wants to buy that are ESG branded? I think that's also a really important thing that these institutions can do because of the unique role that they play in the international financial architecture. And I think we're starting to see the beginnings of it. But key to that is getting not just generally accepted standards, like the Equator Principles are generally accepted, but getting them more systematized in how they're applied, actually how they're executed. So getting much more refined in kind of, if you will, the ratings of these kinds of assets.
Okay, thank you, everyone. That's all we have time for. There is a full panel on SRI issuance, I think, tomorrow, for those of you who are more interested in it. So I'd like to thank very much my panel for taking part and joining me on stage, and thank you all for listening.
Thank you.